Hi, my name's Ian Murray-Jones. I'm one of the in-house tax writers at Thomson Reuters. The feedback we've been getting from our sales reps is that people are quite curious about what the government is going to do, given that there is nothing remaining from the election that it needs to implement. Well, the government has been giving quite a bit of attention to the black economy in recent years. Increased funding for special task forces has popped up in pretty much every budget. For example, there is the ATO's task force, which focuses on large corporates, multinationals and high wealth individuals. From task forces comes particular measures. I think we're going to get a continual flow through of this. For example, the current proposal in relation to cash payments has already generated a lot of publicity, pretty much all of it negative. The measures are contained in a draft bill and the details are up on the slide. There will be an economy-wide cash payment limit of $10,000 for payments made or accepted by businesses for goods and services. Transactions above this amount will need to be made electronically or by cheque. There are a number of proposed exceptions, including payments related to personal or private transactions other than real property. Bob Katter, for one, has called the measures un-Australian, and a number of well-intentioned groups are strongly expressing their opposition. However, it's worth keeping in mind that there are measures already in place that affect cash payments. From 1 July 2019, employers have been unable to claim a deduction for cash payments made to contractors who do not supply an ABN. There are other measures that may come to fruition soon, up on the current slide. For example, think ABNs. The government flagged in the last budget that it would seek to change the rules for ABNs. This would involve not only how ABNs are obtained and used, but there is also talk of imposing a form of renewal test on their use. There has been a Treasury consultation paper on this, so expect more on it. For those of you in practice, I'm not sure what the term single-touch payroll means to you. To me, it represents the digitalisation of the interaction between the tax office, businesses and taxpayers. There's going to be more and more of this in the coming years. Dealing with taxpayers via their MyGov ATO account is efficient from the tax office's point of view, although the question arises as to whether it is always that way for businesses. Expanding the STP measures dovetails very neatly from the government's perspective with the crackdown on the black economy. Put all transactions into an electronic trail and it becomes very difficult to hide them from the tax office. Tax residency is also in the government's sight. Anyone who has had anything to do with the residency status of individuals knows that the rules can resemble a dog's breakfast when you try to put them into practice. I recall the Harding case, which went up before the federal court last year, in which the size of the taxpayer's suitcase was a factor for consideration. I think everybody recognises that this is totally absurd. Treasury released a discussion paper last year, and recently the government asked the Board of Taxation to conduct a review of Australia's corporate tax residency rules. So the issue of residency will be looked at as a whole, which would be a good thing. Division 7A is a bit of a monster as far as I'm concerned. You can easily see the issue that Div 7A is trying to fix, but the legislation is complex when it comes to putting that intention into practice. There has been a consultation paper released by Treasury. The government has announced in various budgets the time frame for when it hopes to have new rules put in place, the latest being 1 July 2020. We'll see. A policy that has caused concerns and problems is the removal of the CGT main resident exemption for foreign residents. It is meant to take effect from May 2017. But the bill was examined by a parliamentary committee which found a lot of problems with it. Nevertheless, the government intends to proceed with it. So if you have clients who are Australian nationals who own property here but are living overseas, keep an eye on it. Alternatively, if you know anyone who's a foreign national who has bought a residence here, you'll want to follow this one. Finally, there are a few of what I would call macroeconomic possibilities that could have tax impacts. I think even Blind Freddy would have read that there is a trade war going on. This could have negative impacts on the global economy. It might be necessary to stimulate the Australian economy if it starts to slow. Given interest rates are so low, it may be necessary to input tax cuts. Yes, I think it's entirely possible that tax cuts could again enter the political discussion despite falling government revenues. I'd like to thank you for your time. Please go to our website to get our contact details about any of these topics. We have a lot of information about them which we'd love to share. Hope to see you again soon.